Welcome to the lesson 2 of the course. In this lesson, I'll be explaining the importance of cash flow statement as well as we will see how does a cash flow statement looks in its standard form. To do that, I'll give you an example. Imagine that you are running a company that has a very healthy business, and you have around $10,000 in your company's account. The products that you are selling, they have a healthy margin and the raw material cost is just 60% of the sales. Expenses other than raw material cost are very low at $10,000 and you have a very healthy growth rate of 50%. And what's happening on day-to-day basis? You have purchased raw material from your supplier and you are making it into finished products. You pay to your supplier in 30 days. That is, after 30 days, you pay them for the raw material that you have purchased. Whereas your customer pays you in 60 days. So imagine that you have purchased raw material on 15th of a month. You will be paying to your supplier on 15th of next month. Whereas if you have supplied something to your customer, they will be paying you after 2 months. So here is what is happening month on month. At the end of the month, suppose that you have made sales of $50,000 and because of that, from your suppliers you have taken raw material of around $30,000. So end of the month, what are you supposed to pay to your supplier? Nothing, because 30 days have not passed yet. The bills rents, that is around $10,000 that you are supposed to pay every month. You have around $10,000 in your bank. So subtracting the 10,000, the standard rent that you are supposed to pay from the bank balance, you have zero at the end of the month. You are slightly concerned, but you are happy that you are selling a product that has healthy margins as well as healthy growth. So you hope that by the end of the second month, things will be okay. Let's see what happens at the end of the month 2. You're supposed to pay $30,000 to your supplier, which they have supplied you in the first month. The rent that you're supposed to pay, standard $10,000, still remains. Are you going to receive anything from the customer yet? No, nothing yet. The $50,000 sales that you have done already, the money you will be receiving at the end of 2 months, and 2 months have not yet been completed. So you have a negative $40,000 in your kitty. That is, you're concerned that you are making good sales, but still you don't have money to pay your day-to-day bills or run your company. But nevertheless, you feel that you are making good sales as well as on a good growth rate. So you feel that at the end of third month, things will be okay. Now what happens? You are growing at 50% rate, and that's why the $50,000 sales that you did in the first month have grown to $75,000 in the second month, and thus 60% of 75,000, that is $45,000 raw material you have purchased in the second month, and you are supposed to pay to your supplier that $45,000, and that 10,000 rent still remains, and finally your customer have given you the $50,000 which he or she purchased from you in the first month. That is, 60 days are over and they have sent you the $50,000 check that you're supposed to receive. Now you're finally happy, but you still have a minus $40,000 hole in your kitty. How come? So you have a positive 50,000 you receive from your customer, and you are supposed to pay $55,000. This sum minus 55,000 plus 50,000, so minus 5,000, plus this minus 40,000, so all in all minus 45,000. The same story continues month on month, though your company is making good sales and having a good growth rate. And this is the importance of cash. So if you see that the P&L statement is showing healthy margins, you should not assume that the company might be having sufficient cash with it. And because cash is very important to give confidence to suppliers as well as to bank, cash flow statement has a very important role to play to run the company day in and out. I hope you have understood that how cash flow statement is different from P&L statement and what is its significance. Here is how the cash flow statement looks in its standard format. The cash receipts from the customer. Yeah, we have already seen that 50,000 or whatever was our sales. Cash paid to suppliers and employees, that is our expenses. Cash generated from operations, that is sum of these two. Interest paid, income taxes paid, sum of all this come as operating activities, whereas investing activities is nothing but sales of equipment, dividend received, and cash flow from financing activities is nothing but the dividend paid. So basically the cash flow is divided into three segments: operating activities, investment activities, and financing activities. And some of these three will be the standard cash and cash equivalent that we have generated or we are in negative at the end of the year. Thank you.